Hello, everybody, and welcome. Today, we're going to be going over the loan intake for both RCN Capital and the Bridge Loan Network aspect of it. My name is Connor Hibbs, and I'm with Business Development over here at RCN Capital. I'm also being joined by Jacob Therrien over on Bridge Loan Network. So today, just to start us off, we're going to be going over a bit of the vetting process and things you should be looking for prior to submitting a loan. There we go. So some things that we're going to want to see off the bat before you go ahead and submit that loan. We're going to want to make sure that the borrower in each scenario does have cash reserves. Now, the cash reserves can vary quite a bit based off of not only the size of the loan and the property, but also what exactly they're planning to do with that property. For example, here at RCN, we release rehab funds in draws. So if your borrower was planning on completing some rehab, then they would want to make sure that they do have enough cash reserves after all of the closing fees to be able to begin that rehab process. That way they could begin it, and then they would receive their draws from escrow as they continue forward progress with that property. And on the flip side, if they were to be looking for, say, a long-term loan, then also in addition to closing costs, we would want to make sure that they do have cash reserves for 1 year's worth of tax and insurance, which would be put into escrow. So we're going to want to make sure that they have not only that, but also if they're going to be able to make the down payment. If it's a cash out refinance, again, that's not going to be quite as heavy. But really, we're just going to want to make sure that they do have the cash to be able to go through the process. The next thing that we're going to want to see is that the borrower has a 620 plus FICO score. We do have some programs that have a slightly higher FICO score requirement. For example, the ground up construction and the stabilized bridge both have a slightly higher than 620 FICO score requirement, but that is a part of the process that you're going to want to vet. That way you make sure you're not collecting all of this data and information for your borrower's property just to find out that they have a 500 FICO score and you really can't do much with them. Now, in that scenario, they would still have the option of bringing on a partner who has a higher FICO score. So that is one workaround for that scenario, but that's something that's best addressed in the earlier stages of the loan process as opposed to after you've already been collecting data, information, and submitting, trying to get rough term sheets. The next thing that we're really going to want to see is that your borrower has selected a property. Here at RCN, we don't do lines of credit, and we do lend primarily on the property itself. So what I'm saying there is even if you have a borrower who has an 800 plus FICO score, they've got 30 experience in the last 3 years, if they're looking to purchase a property that doesn't meet our guidelines minimum requirements, then there's really not much that we can do there. So we do want to make sure that they have selected a property, that the property that they've selected, they do have some sort of strategy, whether it be a purchase, rehab, refinance, or if they just wanted to do a fix and flip, or even if they just wanted to purchase, say, a turnkey property and just rent it out immediately. So again, we are going to want to make sure that you are checking that these borrowers have the cash reserves to be able to do the deals that they want to do, that they have a FICO score it's compatible with the programs that they're seeking, and then also making sure that they have selected a property. Now, as you're going about introducing these loans to your clients, obviously you're trying to give them a rough idea of what those loans would look like. So some of the things that will affect pricing as they do go through the loans, and you can see here that it's a little bit different between short-term loans and long-term loans. So with the short-term loans, we're really going to be looking at the experience and the property numbers a lot closer. Now, again, we are completely fine working with a borrower that doesn't have any prior experience with fix and flips or any other short-term loans. However, borrowers that do have more experience are eligible for those lower interest rates, higher leverages, and in some cases, if they are looking to do, say, heavy rehab or maybe change of use of the property, things like adding a unit, those are going to be things that are really only applicable to the more experienced borrowers. So while we are able to lend with those new borrowers, it's important that you get a rough idea of their experience. That way you don't run into a situation of them wanting that heavy rehab on the property or adding a unit and you thinking that it's totally fine because, again, RCN is completely okay with working with new borrowers. However, there is a bit of a limiting factor with the experience when it comes to those more heavy projects. Also, on the flip side, for the long-term loans, we are going to be looking much more closely at the FICO score and the cash flow than we would be with our short-term loans. So this is one of those areas where if your borrower is on that lower end of the FICO score, if they're maybe just at that 625 or 620, this is an area where it's really a good idea to bring up early the idea of them bringing in a partner that has a higher FICO score, as while it's not required for them to bring a partner in since they would be above that 620 minimum. This is one of those areas where by bringing in that extra partner, you can help them in terms of getting them more leverage. So, for example, if they're in the low 600s and they're looking to do a cash out refinance, we may only be able to go to 50 or 55% leverage. However, if they bring in a partner that has, say, a 780 FICO score, that's where we can get them back up towards that 75%. And also getting them down towards that lower interest rate with the potential of going as low as 3.5%. So that's, again, one of those things where kind of doing your due diligence early in the process can help you to kind of cross those bridges before you get to them, so to speak. Also, with the cash flow, you're going to want to make sure that you do have that information of what the monthly rents are, what rents in the area look like, the insurance and the taxes for the property. If you're looking, or if your client is looking to purchase a property that looks nice but has terrible cash flow, that 1.1 DSR minimum requirement that we have may come into play. And often it can either just make it so that we are unable to do the loan, or it would severely decrease the amount of leverage that we would be able to offer to make sure that they are at that 1.1 DSCR. So those are both big things to keep in mind as you are going and vetting these potential loans. And then also the points paid at closing. This is really more so a tool for you, but it's also something that you should be aware of as you're talking to your clients. It's really a little bit less relevant with the short-term loans, especially the fix and flips, as typically lowering your interest rate won't help you that much if they're only kind of keep that loan for, say, 3 or 4 months while they complete rehab. However, if they are looking at a long-term loan and they're really diligent about getting that lowest interest rate, then it's helpful to bring up earlier to them that they will be paying more points, likely closer to 3 or 3.25, if they want to get to that lowest interest rate. It helps with the transparency, and it really just is a useful tool when it comes to creating that consistent conversation with your clients. Now, some other things that you're really going to want to look at are also things along the line of, is the property rural? RCN Capital can only currently lend in suburban and urban areas. So while a property may seem like it's in a nice little town in, say, Montana that has a population of 3,000 or 4,000, could be a great community, but if it comes back as rural, then that's not something that we would be able to work with. Also, another common one in this space comes down to the amount of acreage. Here at RCN Capital, we are not able to lend on properties that have 10 or more acres of land, regardless of where they are located. So again, that would be another one of those factors that you want to take into consideration as you're going about vetting these leads and looking for the best lenders to match up with. Now, I will kick it off to Jacob to go over the loan intake on the Bridge Loan Network side.
Perfect. Thanks for all that information, Connor. Erica, before I begin, are there any questions that we want to cover that might have come through while Connor was going over his stuff there?
Not at the moment. I'm going to save some of those questions towards the end.
All right,
Okay.
beautiful. Can you guys see my screen okay at this point?
Yes.
All right, cool. So, what I'm going to go over here today are the main kind of ways that loans can be created here in the Bridge Loan Network system. For anybody that's not familiar, which I'm sure most of you on this call are, Bridge Loan Network is a loan management system, a loan origination system. It's the software that's used by RCN Capital. If you're a broker with RCN Capital, you automatically get access to this platform where you can input your deals, work on them simultaneously with your RCN loan officer. If you do not yet have access to Bridge Loan Network, you can email myself, Jacob at bridgeloannetwork.com. You can also reach out to our team directly at broker at bridgeloannetwork.com. If you do either of those things, we'll be happy to get you set up with an account. Our team also offers one-on-one training for Bridge Loan Network, showing you all of its functionality and tools that can help you close these deals with RCN. With all that being said, the specific things that I'm going to be talking about today are going to be very specific on intaking these loans. There's a number of different ways that this can actually happen within the software. So we'll cover each of those, and I'm really going to try to stay parallel to the things that Connor was talking about and kind of what information to have while you're intaking these loans. So the first thing that I'll show you is, my screen right now is the inside of Bridge Loan Network. One thing that I'd highlight to you is up in the top left corner here, it says your logo here. This software can be white labeled. That's a very important tool for you as the broker because it keeps your branding consistent, showing that branding to your clients. There's a lot of tools within Bridge Loan Network that can generate certain tools for you, like term sheets, document upload links, and things of that nature. All of those will be consistent with your branding if you do that with Bridge Loan Network. So I'm going to leave this page for just a moment to go on to one of our online applications. You see it's got that same logo here, so it will again be consistent. Now this is an online application that Bridge Loan Network creates for you, brokers of RCN. Essentially, this is a place where you can send your client and they can fill out a majority of that basic intake information needed on a loan file. If that does occur, you're going to get an email notification letting you know there was a new application input. And then the next thing from there is you can start to upload documents and work on that loan with your loan officer. So what I've done is I've just kind of taken the first step here on this online application, and I had myself, which in this case would be the borrower, filled out my identification, right? So I added in my name and my email address. Now, one of the nice things about this is I've done this before, so it recognized me and it saves my information. If this wasn't me for whatever reason, I could go in as a new borrower. But again, this is my info, so I'm going to go ahead and I'm going to move forward. So once I've identified myself, it's going to bring me inside the intake form. This is just the basic information that we're going to need to enter in to get that loan created. Now, as I mentioned, you see guarantor information has been saved based on previous loans that I've input. If your borrower hits this show optional details button, they can add information about their credit score, their borrowing entity, and even their experience, which is one of those things that Connor mentioned, which is something you as the broker should really be looking for, kind of grabbing that information from your borrower, whether it be sending this online application or just in your conversations via phone or email. So the guarantor information, again, you can get a lot of that basic stuff that RCN is going to be looking for, a lot of the things that are going to affect pricing. From there, it goes into property information. This is very specific to RCN Capital and their guidelines. So if you look at the drop down here, it's really mostly things that RCN is going to be able to fund. Moving on from the property information, I'd highlight just a couple of things before I do so. After repair value here, it's a required field because a lot of the indicators that have been identified in this application already are indicating that this is going to be a fix and flip property or a property that's going to have some type of rehab. Now, because that's indicated, I want to add in what that after repair value estimate is going to be. That value is drastically going to affect leverage and pricing, so it's really important that if you are talking with a client and they have a scenario, that's going to have rehab costs that you gathered that after repair value estimate. From there, it's just going to be the basic information about the loan. As I mentioned, after this is completed and the submit button is pushed, you yourself, the broker, will receive an email notification. You would then also be able to find that loan directly here in your Bridge Loan Network account under the Loan Request tab here. For those of you that have not seen this before, this is where your loans will be stored in this grid, very similar to this. So folks, what I did there is I just covered one form of intake, which again was that online application. If you are a broker with RCN Capital, that is available to you. Reach out to your broker representative at Bridge Loan Network. Reach out to your loan officer. Again, you can reach out to myself, Jacob at bridgeloannetwork.com, and we can get you set up with those if you are not already. The next thing I want to talk about is the way that you, the broker, can log into your account and just input the information on behalf of your client. Maybe they called you up, maybe they sent you an email with all the numbers that you were looking for, and you want to just take that data and get a loan started. A great way to do so would be coming right here to this Create New Request button, and that's going to bring you into our broker intake form. Notice this is functionally going to look a little bit different than the online application that I looked at, but the questions themselves are essentially the exact same. So here we start with the loan details. We're going to go in, we're going to identify if it's a purchase or a refinance of the property. That's going to affect what's shown to me for my use of funds. So for us guys, I'm just going to go ahead and say fix and flip. I'm sorry if you've seen or heard me go over this before, folks, but I think it's really important to cover the information that's exactly going to be needed on these files. So from there, I want to specify my exit strategy. Is this person going to refinance, sell, or hold this property? Since I indicated fix and flip, I'll go ahead and say sell. From there, we just have to add in some values here. So we'll give it a purchase price. We'll add in some rehab costs. Funds to contribute. This is a section that I really wanted to highlight for you folks. Connor spent a good amount of his portion talking about cash reserves. That's going to be indicated here in your funds to contribute. How much are they going to put down for the down payment? Do they have reserves for when this rehab process starts? Can they make that first, 15, 10% of the rehab, whatever it's going to be? Can they do that? So that's where you want to indicate funds to contribute. Think of that as their cash reserves. I'm going to go ahead and for this one, I'm going to give them a nice $30,000 to work with initially. From there, what's the total amount of money that they're looking for? Purchase price, rehab included, minus their down payment, right? So we'll go ahead and give this a nice little loan here. We're going to select the desired term as 12 months. From there, folks, it's going to give us the property details. So first thing I want to enter is my subject property address. You're going to notice as I start to type in my address here, real addresses are popping up via Google. So when I find my address, I can go ahead and click on it here. From there, it's going to ask me to specify what type of a property is this. I'm going to go ahead and say single family. From there, it's going to give me the rest of the property details that are needed. Specifying the occupancy status. For RCN folks, it's really important that you specify that occupancy status, because if this is a refinance property per se, it's going to be important that it's cash flowing. If it's not cash flowing, like Connor mentioned, that's going to affect pricing. So really indicate that occupancy value or status rather. This next question is also very important. Does the borrower plan to live in the property? As most of you are probably aware, RCN only lends to non-owner occupied properties, so you want to make sure to specify no there for that one. We'll say yes, there is a purchase and sales agreement. From there, you can specify the target closing date. If your borrower indicates to you, we want to close by this date, you can specify that there. That way, when your RCN loan officer works on the deal with you, they've got that same date in mind. From there, I'm just going to go ahead and enter in an as-is value, and again, that after repair value that I was looking at earlier. So we'll go ahead and give this a nice ARV. Now, the last section is going to be your guarantor details. Whereas on the online application, it started with that borrower's information because they were the one entering it here. On the intake form for you, the broker, we're going to finish with that information. So here you first have your opportunity to search your database. If it's a borrower you worked with before and you've entered in loans, you can search their name or their email address. I just searched Jacob, my first name. You can see we've got some folks listed under that name. I'm just going to go ahead and select myself. You see it pre-populates my information from those previous files. From there, folks, if it's a new guarantor, so let's say, it wasn't anybody I worked with before, I'd click new guarantor and I'd fill out their information. And again, much like you saw in the online application, this is going to give us a lot of those values that RCN is going to be looking for. So how many investment properties have they sold? What is their credit score? Things of that nature. So really great start to the process. Once all this is filled out, that loan would be created here in your loan request grid. So that's two ways, the online application, the direct input through the create new request button, two ways that loans can be created for RCN within the Bridge Loan Network software. Another thing that Connor indicated was the credit score and how that might affect the ability for RCN to actually fund a project. It might cause for the need of a partner. It might be a loan that flat out can't be done. Now, before you, the broker, waste a lot of time and energy on that particular scenario, it's always a good opportunity to do as much due diligence as you can. One of the offerings here in Bridge Loan Network is allowing you to order a soft credit pull on a guarantor before the loan gets too far in the process. So you see this green button right here, soft credit pull. That's going to do just that. I input some credentials about the borrower, i.e., I need their first, last, date of birth, and social. Once I have that, I can run a soft credit pull. That soft credit pull will give you their middle score. Doesn't matter if it's TransUnion, Experian, it's going to give the middle score with a brief summary of their back credit history. So if they have any major delinquencies, you would see that. And again, you'd get that middle score. So if that middle score comes back and let's say it's around 780, you're probably in good shape to go ahead and move forward. If that middle score comes somewhere closer to the low sixes, you might want to really have a conversation with that person about what their credit score, maybe even run the full credit report before you get too far along the process. If you run a soft credit pull from this button right here, it will also create a new loan for that person. It's going to save that soft credit report on that loan file, so you always have a copy of it. From there, it's just going to be up to you to add the rest of the details of the loan. So how much money are they looking for? What's their cash reserves? What are the property details? It's only going to create that loan with the borrower's information that was used to order that soft credit pull. So from there, it's up to you guys to just fill in the blanks. Now, the fourth and final way that I want to talk about creating loans here today is through the loan calculator. If you guys have been with us here before, you've probably heard us talk about the loan calculator. The loan calculator is an amazing tool offered here through Bridge Loan Network for clients of RCN. The loan calculator allows you as the broker to, one, price out deals, make sure it's actually going to be a fit for RCN before you get too far along in the process. The other thing, one of the major things that it allows you to do is download a branded term sheet that you could pass along to your client and show them exactly what the terms of this deal could potentially look like. So I'm going to jump into the loan calculator here. I'm going to briefly cover how to do a pricing in here because, again, we have past videos for that. I can send you those. If you need those, feel free to request them. But I want to show you how to actually create a loan from a saved pricing here. I think that's going to be a really useful tool for you folks. So first off, if I want to start a new pricing, somebody calls me up on the phone, somebody sends me an email with a scenario, I want to see where it's going to fall with RCN, I come into my loan calculator and I start to fill out this information. I start much like I do in the intake form with the loan term, the use of funds, and then again the property type. Once I've done that, it's going to ask me for the key details that are going to be needed to give us this pricing. So I'm going to fill out, guys, everything in here with this red asterisk here. That means it's a required field. So I'm going to go ahead and autofill this. Most of the information that I'm typing in right now, folks, is the information that I used to create that loan a little while ago. So it's going to give us actual pricing based on that scenario we were looking at before. Now, one thing that I would mention, if you've already created the loan, if the loan already exists within Bridge Loan Network, you do not need to come into the loan calculator and fill that information again. If I'll show you in just a second, if you already created that loan, how you can create pricing based on that information. What I'm doing now is if I have a brand new scenario that does not exist in Bridge Loan Network at this point. So I fill out all those basic data points. I hit calculate pricing. That actually generates me the pricing for this scenario, giving me some key values for closing costs, liquidity requirements, and then I can also see what our baseline charges are going to be to RCN, what are their points and interest rates going to look like, and then again from there you can finalize your pricing as the broker on the scenario. So what I want to focus on is your opportunities from here. Once the pricing's been kind of finalized, you can send your pricing to RCN, which will allow them to kind of get eyes on this as well, give you any feedback on the pricing. And then you can save the pricing here. That's going to be a huge tool. If you're talking to somebody, you have to step away from your computer for something else and come back to this. A great way to do so is save pricing. Another thing, and this is a thing that I've heard directly from loan officers at RCN, is I might be talking to somebody today. They don't answer me for a week or so. I can come back in here to the pricing that I've already ran for them, come back, make any edits if any of the values on the left-hand side have changed. Maybe they indicated their credit score is a little higher. Maybe they have some more money to bring to the table as cash reserves, anything like that. I can come back in here and change those values, see how it would affect pricing. And then as I mentioned before, you can get that term sheet as well. If you hit download pricing, it will download that term sheet for you, which again will be branded to your company. And that is going to give those data points that we're looking at here within the calculator. Now, one of the things that I'm going to show you is how to access your saved pricing. So if I've already saved the pricing, I've sent my client the term sheet, and they come back to me and they say, yeah, this looks great, let's move forward. You can open up your saved pricings by coming right up to the top left-hand corner, searching the name that you saved it by, or you can hit this My Saved Pricings button, and that pulls up my library of all the pricings that I've ever saved previously. So if I wanted to go into any of those, I hit this little blue $sign. That's going to open up that saved pricing for me with all the values, the way that I had structured that previously, and then any edits that I had made. From there, I already have all the data points that I need to create an actual loan file. So if that's the next step I wanted to take, I can hit this button that says Create Loan. What that's going to do for us, folks, is it's going to carry over all of this information directly into the broker intake form that I showed you not too long ago. And then from there, the only things that you really have to fill out are the property details. What's the address? And then from there, guys, you've got a new loan that would be populated within your loan request queue. Now, as I mentioned, if a loan's already been created, if somebody sent it to you, maybe they used your online application and that loan came in, and now you want to use those values to actually generate some pricing, you can come right over here. Oh, I'm sorry. This account is not enabled to do this at this time, but there would be another function here that would say generate pricing, and that's actually going to carry over my values into the loan calculator. So again, if I have a loan that's already been created and I want to use those values without having to manually type that info into the loan calculator, we can enable your account to generate the pricing from existing loan files. Folks, that really covers the topics that we wanted to talk about here today. We wanted to keep it very informative to you. Some of these tools, much like the online application, can be a huge time saver. It can be a great way to increase your brand the more application links that you have flying around out there, your clients are passing them to each other, you're passing them out on marketing material, social media posts, any type of marketing that you do, you can attach that application links and just drive that much more business into your company. Connor, any last things that you want to talk about related to any of the stuff that I spoke on Bridgelow Network side, how this might be useful, or give any transparency with their loan officer even?
Yeah, so this really is a great tool, especially in that initial phase of trying to get sort of a rough idea of what you can offer your clients, especially going in and using that loan calculator. It really, especially on some of the loans that you're less familiar with, it allows you to see the things that we're going to be asking you anyways. So the things such as the experience, or if there's completed rehab on the property in the past for, say, a cash out refinance on a long term. So those are things that by going into this, you not only are enabling yourself to put together a rough term sheet that you can then bring over to your client, but it also kind of reminds you of some of those things that you maybe aren't thinking about as much in terms of how they might impact a loan, but they are things that do become relevant as we go deeper into the closing phases and really pricing out in terms of leverage and interest rates.
Awesome. Thank you for that background as well. Erica, it looks like we have some questions in the chat. Do we want to start addressing any of those?
Yeah, of course. I want to thank you guys all for joining us too. A lot of these questions are going to pertain to our CN Capital's loan program specifically. So thank you guys for attending. One of the questions we have is, do you offer a proof of funds letters for borrowers?
So we do. It's something where we would want to make sure that we've already taken a look at the property. We tend to call it an LOI or letter of intent, but really that's something that a loan officer would be able to put together within about 24 hours to kind of give you your, so to speak, proof of funds. I do want to mention that it's not something that can be used in placement of funds. So some of those auctions, especially in Florida and California, where they do require the full payment of the property within 24 hours, that's not something where that LOI or letter of intent would be able to cover that, but that we are able to provide the letter of intent within 24 hours, which serves as sort of a proof of funds as you're going through the closing phases and under contract.
Thank you, Connor. I have a separate question, I believe, that will go towards you as well. Is there a specific down payment for a ground up construction project for development of condos?
So when it comes to condos, it's really not something that it's kind of situational with whether or not we would be able to do that. Currently, with our ground up construction program, we're looking primarily for properties that would be conforming to surrounding properties. So we're not looking to build a neighborhood or a road or an entire condo complex. Currently, what we're able to do is if there's an empty lot in a neighborhood with several other properties around it, we would be able to fund up to 90% of the cost to be able to construct another property that's similar to those other surrounding properties. So when I say similar, I'm talking in terms of the size of the property, things like room count, the style of it, whether it's a colonial or a ranch, and then also the value of it. Now, we understand that a brand new home is going to be worth slightly more than the same home 10 years down the road. That's fine, but what we're looking to avoid is a neighborhood of $150,000 properties where you're going in there and building a $550,000 property. So in terms of how much is required as a down payment for a condo, it would really depend on what that condo looks like and what the area around it is like. But also just in general terms, when it comes to that ground up construction project, there's no set down payment. It would really come down to the size of the project, what exactly is being done, and really the borrower's credentials in terms of what we're able to offer them. As again, a very experienced ground up construction person or client is going to get better terms than somebody that's only completed one. So there's really several factors that would go into that. But I also would just like to reiterate one more time that with the ground up construction, it is really just for building properties that will conform into that neighborhood.
Thank you, Connor. And then we had a question that I think both of you can kind of address on both sides. How can brokers get additional training? And I think Amplify and BLN training would be great to discuss.
Yeah, so you want to go first on that one, Jacob?
Yeah, absolutely. So, as I mentioned, and I think I saw there, Erica had posted my email in the chat. So, if you need that, feel free to grab that. Again, Jacob at bridgeloannetwork.com. If you guys are looking for additional training, our staff here at Bridge Loan Network, we have broker account managers. They are the ones that are specifically in charge for getting you guys, the brokers, set up, trained, additional training for your employees. So, if you are doing so much business that you need to bring on a few more people, we can get them trained up on the software too, so they know exactly, what they're looking at, how to get those loans over to their loan officer, and use these tools that are offered through Bridge Loan Network here.
Yeah, and in terms of RCN Capital and learning about our guidelines, pricing factors, other tips and shortcuts, really Amplify is the best place to go for it. We're always happy to talk to you over here in business development to help get you started, give you rough ideas of what exactly a loan would look like or possible problematic things with it. But Amplify is really just, it's a set of courses that are designed to help you as a broker or even your staff to be able to get more comfortable with RCN's guidelines. Again, those factors that come into play. And it really allows you to take a deeper dive than what I would be able to explain in this 45 minutes of your time. There's also several other helpful things in there, including one that we've recently done, which is 7 Habits of Successful Brokers. So it's really not just about learning everything there is about RCN, but it's also other ways that you can help to improve yourself as a broker in general. So I would highly recommend signing up for Amplify. It's not something where every course is mandatory. You are able to select whether you would like to really focus on only those long-term loans, or if you're really more so just focused on fix and flips. So there's a lot of information in there, a lot of great material. Each course takes roughly 10 to 15 minutes. So it's kind of something that you can do at your leisure. But I highly recommend that if you're trying to get a bit more information about RCN specifically, but also just kind of getting into becoming a broker.
Perfect. And what's that email address, Connor, that folks can send requests to join Amplify?
So I'll pull that up and I'll put it in the chat really quick.
Perfect. Because like Connor said, Amplify is a free training platform that RCN Capital offers. And it's completely self-paced. They have different courses on all the loan programs, how to submit deals, pretty much the ins and outs of brokering. There have been a couple questions in the chat as well. The recording of this training that we're hosting right now, everybody who attended and those folks who did not attend, I will send the recording to, as well as Connor's slides that he was presenting in the beginning of the training.
I'd add one thing here, guys. We appreciate, like Erica said, every one of you guys joining us here today. Connor and I plan to do these trainings for you guys pretty frequently. If you guys have suggestions of things that you'd like us to talk about, or additional things you'd like to see in here, maybe it's more general, industry kind of things, or whatever it may be, feel free to let us know. Let the folks at Business Development know at RCN. Feel free to send any of those my way, and we'll be happy to kind of incorporate some of that stuff into these future trainings as well.
Connor, this one is for you too while you're grabbing that email address. Are there restrictions on regions in rural states or areas that RCN will not touch loans on?
Yeah, so really we just want to make sure that the property is in an urban or suburban area. We're going to want to avoid areas that have a high level of vacancy. We do want to make sure that there are properties in the area. We're looking to avoid things such as boarded up homes. Really, outside of that, though, just making sure that the property is under 10 acres. It's in a populated area that does come back as suburban or urban. And then also there are several states that we are not currently lending in. So the states that we currently do not lend in are the Dakotas, so North Dakota and South Dakota, Vermont, Alaska, Minnesota, and Nevada. Nevada, as well as sort of Minnesota, because there is the Twin Cities there, are largely due to just the complications that come with getting licensed there. The other ones are really more so due to just a lack of leads and potential loans that come in from there. But again, all states outside of Nevada, the Dakotas, Minnesota, Vermont, and Alaska, we are able to lend in, but we do just want to make sure that the property is in an urban or suburban area and that there are other properties around there, especially if it's going to be one of those very large properties. We would like to see that there are comparable properties in the area as well.
Thank you. And then somebody asked, is there an application fee to apply for a loan with RCN Capital?
So there is no application fee. So when it comes to the fees for RCN Capital, no fees that go towards RCN Capital will be paid until closing. Now, I would like to mention that RCN Capital does not collect anything on the appraisal, and there are also some other documents such as if an environmental study is required, that's something that we would require that that documentation is provided. However, that's not something that we would be collecting on.
Thank you. And then somebody asked, if somebody has 3 properties that they are buying, can those be grouped together as one loan?
So that is an interesting question because it's a bit of a yes and a no. So I'll start with the situation where that is possible. That would be with the long-term loan. Really, we're looking to avoid any partial release fees. That's the big thing with going with the portfolio. So you would want to make sure that your client is really making sure that they are planning on keeping that property for, I like to say 7 to 10 years. There's really no magic number for it. But as long as they plan on keeping those properties over a long period of time, that is something that we're able to do. There are some advantages to doing that as well, such as a slight reduction in the legal fee after the first property. There is also a possibility, and I'd like to make sure I say possibility, that the appraisals could be slightly discounted after the first property. Again, that's a possibility. That's not something that's guaranteed to happen, and it's more likely if the properties are very close in location to each other. So for example, if there's 3 houses all on the same street that this investor is looking to buy, it's likely that you may be able to get that slight discount there. However, if there's one property in California, one in Florida, and one in Texas, it's not very likely that there will be a slight discount there. Now, for a situation where we would not be able to do that would be, say, a fix and flip, anything where they want to complete rehab or sell off one of the properties after a small amount of time. And then also these stabilized bridge loans, again, really because they're not going to be holding on to them very long for that. So the main reason why we don't do that with those is because of those partial release fees. Say you wanted to do a portfolio loan of 3 fix and flipped properties. You complete 2 of them in 4 months. One of them has been a pain. It's been really difficult getting materials there for whatever reason. It's just taking longer. you would need to pay roughly 20% of the remaining balance on each of those properties if you wanted to remove them in addition to just taking them out of the loan. So what that would look like is, say, you had $100,000 that you owned on 2 properties, so $100,000 each. It would be that $100,000 plus 20%, so it would be $120,000 for each of those to remove that. That is where it is better, especially with the fix and flip loans, since there are no prepayment penalties, to just get those done individually. Now, the portfolio is a great program, but again, you're going to want to make sure that the borrower is planning on holding on to those properties. So the answer is yes, you can purchase 3 properties at once, but also, and again, this comes back to that due diligence when you're talking to your clients, you want to make sure you know what they're doing, because it may make more sense for them to just do even 2 loans, one that has 2 properties in it that they plan on keeping for a long time, and then a separate loan for a property that they might want to sell off in a few years.
Awesome, thank you. And then somebody asked, are we lending on Airbnbs, hotels, motels, and mixed-use properties?
So Airbnbs, we've recently opened up to again, as well as shorter-term leases or shorter-term renters. We would want to see that they've got roughly a year of history with that. Or if they're looking to acquire the property to begin doing an Airbnb with it, then we would just want to see that they have some experience with that in the past, and we would kind of take a look around the area to see comparable properties and how they're doing. As for hotels, motels, assisted living, those are all things that we would not be able to lend on. But the Airbnbs we are currently able to lend on.
Thank you. And then going back to the application fee, is it possible for the broker to charge his or her client an application fee?
Yeah, so that really comes down to what you can sell yourself on. I get that question, as well as how many points can you charge, fairly often. And the answer is really whatever you can sell yourself on. With the points, I will mention that there is a cap at 5 points between RCN as well as the broker. So that could look like 2.5 points to RCN, 2.5 points to you as a broker. But it's something to think about when you're getting into those loans where, especially with the long term, where they tend to pay more points on closing to make sure they get that lower interest rate. So really, as long as it's at or below 5 points on closing, that's fine. And in terms of the application fee, while we do not charge one here at RCN Capital, you are able to say, if you wanted to, that you can charge an application fee.
Yeah, and I'd just tack on to that as well. We looked at the loan calculator a little earlier. One of the opportunities that you have as a broker is to indicate any additional closing fees. So if you did want to charge an application fee, you could place that in the loan calculator, where if you got that term sheet, that application fee would be listed under the closing costs as well.
Perfect. And we're going to wrap it up with this final question. Can the borrower or broker order their own appraisal, or must it go through RCN's vendor?
We do want to sort of middleman it. We would like to be the third party just to make sure that an AMC or appraisal management company is used, but also we want to make sure that it is an arm's length dealing. Really, we're just trying to make sure that it's not a friend of a friend who's willing to kind of bump up or ARV for what another person would. It's not necessarily that we don't trust that they would pick someone who is, again, at an arm's length in the transaction, but it's just one of those things where it helps us to just make sure that it's being done right.
Thank you, Connor. And with that, I think we can wrap up the training for today. If you have any additional questions that Connor or Jacob did not get to during this training, I put both of their contact informations in the chat as well as the email to sign up for Amplify, which is again RCN's free training platform.
Thank you all for joining us. Appreciated.
Thank you very much. And again, as Erica said, please feel free to reach out to us if you have any extra questions. Also, if you do have a deal scenario that you want to run by us, you can reach out to myself and the other members of business development at bizdev@rcncapital.com. So that's BISDEV@rcncapital.com.
Thank you guys.
Thank you.